Foram, if I can ask you about the auto pack to start with, for the kind of numbers and the kind of traction it's drawing in trade today, do you think that this can be sustained? Because it's coming on the back of all these fears that there is a bit of a slowdown happening in Motown. But clearly now there seems to be a mood shift that the festive cheer, which most of these auto manufacturers bank on, could actually be delivering.
Yeah, so I feel that this would be sustainable. I mean, of course, this month we had some not up to the mark performance across the board. But then I feel with the flood kind situation getting back to normalcy, and again the hike in the MSP prices, and also the fact that the crude prices have fallen down, so it would have a positive impact over the board. So I feel that demand would definitely come back across the segment. And as we have seen that this was one kind of a performance hit because Maruti did not report a good set of numbers, but on the second hand, if we see Bajaj Auto posted very good set of numbers, Escort, Mahindra and Mahindra all reported very good set of numbers. So we feel that the good tractions would continue to be there across the segment, be it the commercial vehicles, the passengers, the two-wheelers, and all will continue to report good set of numbers. Across the board, we are bullish on Ashok Leyland because the kind of commercial activities, the infrastructure development that's happening within the country, so it augurs very good demand for the commercial vehicle segment, be it the medium and the heavy vehicle segment or the low commercial vehicle segment. I think that is why we are little more skewed towards the commercial vehicle segment than the passenger vehicle segments.
Right, Foram. And speaking about Bajaj Auto, since it is the highlight today, the stock has surged 3 odd percentage points, delivering the highest monthly sales ever. We had a chance to speak about it with Rakesh Sharma, who's the Chief Commercial Officer at the company. Very optimistic about hitting their 5 million sales target for FY19. Listen to this.
Going forward, we expect to maintain the growth tempo, though the absolute numbers will come down because, we enter a very, very sort of a dead kind of a period, both domestically and internationally, between, let's say, November and Jan-Feb. In the CV business, I think we will continue to clock our absolute numbers, but in terms of growth rates, it will look lower. We see no reason to not strive for the 5 million target.
Well, this is definitely going to play out going ahead, and what could also contribute to the kind of sentiment which we have been hinting at from time to time. It's what automakers are also looking at, the way crude oil prices are moving, because that weighs on buyer sentiment. Crude concerns are fading. Oil is falling now, like I mentioned, to near 7-month lows. The markets have rebounded in style because of that, and so have crude-related counters. So you're looking at aviation paints, you're looking at OMCs as well. All of these are showing good traction. But now the question is, with Iran sanctions looming, how long is this crude relief likely to continue? So how would you look, Foram, at the aviation pack, at some of these paint counters and OMCs? If you think that crude oil is going to stay in a kind of range, do you think that we could stay at these levels? I'm seeing an IOC also come out with their Q2 numbers. The PAT has come in at 3,250 crore rupees. I'll have to do a check on how this stacks up against estimates, but the revenue from operations has come in at 1.5 lakh crore rupees. IOC as a stock is up about 4.5 percentage points, and it's moving up for the kind of numbers that it has posted. We'll have to check against the estimates, and we'll get you that in a moment. But see what crude oil is doing, what it's doing to the OMCs as well. Foram, do you see opportunities build up over here? Do you think that dips in these sectors are opportunities to buy?
Yes, certainly. I feel that aviation companies should definitely be bought at current levels. Across the board, all the three aviation counters have corrected significantly from their highs. And if we look, there's a structural demand change happening. We see the PLF factors, the demand growth. Month on month across the board, the PLF factors has been improving. The market share has been improving as a result, and the fact that we have got this opportunity of buying the aviation counters at a lower price. I certainly feel one should capitalize on this opportunity. Among the pack, we see Indigo doing really very good. Of course the numbers have not come up to the mark, but it was definitely expected because of the higher crude prices. Now that we see that crude is settling down below $75 per barrel, and which is also a comfortable range for most of the aviation companies. So we feel that one should definitely look into the counter and the sector right now. Also, we are seeing a lot of positive movement happening in the jet also. So we feel that jet is also undervalued and should definitely be bought at current levels. So we are really very bullish. But also, if you see, the entire OMCs have also corrected from their highs. But there is again uncertainty. So we do not want to play the counter on the basis of the crude story.
Right.
But
Foram,
we see a lot of demand.
Understanding from my friend Piyush, who's joining us right now, to put the numbers coming out of IOC in focus, because they don't seem to be very good. The stock, though, is still up 4.5 percentage point on a day that we've seen crude oil prices fall. But the impact of earnings likely to play out or not? Do put that in focus for us, Piyush. How is it looking for IOC for the second quarter?
Well, for IOC again, it's almost what BPCL told us from the result per se, and the precursor was very clear. This is going to be a disappointing quarter for the OMCs. IOC has done the same. It's a miss on EBITDA, a miss again on the earnings, and this looks again a weakish performance coming. Both from HPCL and BPCL, again those actually were very weak, and again we actually are seeing the same from IOC. So core refining margins actually have disappointed in the September quarter for all OMCs. IOC again is not an exception. So a similar sort of performance we actually have seen from IOC. Now from a sort of marketing EBITDA perspective, that again could be slight aberration, but for Indian Oil Corporation, again this was a weakish quarter coming from refining. Marketing, again perhaps we could be expecting slightly weaker October for OMCs, but looking at the fall in the Brent oil prices, again that is actually going to prove a positive factor for the November-December month here. Some numbers again actually have got, again those actually numbers are telling me very clearly, again the GRM number actually were weaker, and that again was a primary factor in the form of weak results from IOC. Also one factor, again if I'm the higher other income, so again despite higher than other income, actually you are looking at a miss on profit. So in fact almost 400 crores higher other income. So this is again a disappointment, and if you look at exceptional, no major exceptional. So Vikram, again it's a pure miss. It's a pure weak operating performance coming from Indian Oil Corporation. Having said that, we also have now Godrej consumer results again which have come by.
Right. GCPL has reported a PAT of 578 crore rupees. We are looking at the kind of numbers that are being reported right now. It's a consolidated PAT of 578 crore rupees that is coming in. The stock is moving up about 1.5% at this point in time. So
these are above estimate
numbers. And these numbers clearly are above estimates, like Piyush is hinting. Revenue at 1,680 crores. There is the Bharat Forge numbers that are flashing on our screens as well. So sometimes it can get a little confusing because they're coming in so thick and fast. But yes, the Godrej consumer number stands at a consolidated PAT of 578 crore rupees. Piyush, how does it look? Have you been following GCPL numbers? Because right now we're seeing a spike as far as the stock price is concerned.
Well, on our earnings front, again, this definitely looks very strong. But on our 5% volume growth, again, when you're looking at the other companies reporting 8%, 10%, 12% volume growth, again, from that front, you could actually have a mixed feeling on the results. So, yes, on our earnings front, these numbers are actually beating the estimates. We might have to look within the details if there is any sort of major one-off or major exceptional or very significant jump in other income. But if that is not there, then I think earnings actually is depicting a strong performance. Volume growth, actually you can just be slightly dissatisfied. Again, a 5% volume growth, again you would like to have more. festive season, maybe again the next quarter could be slightly more, but it's a mix, and that's why the stock is not going up substantially.
Piyush, of 262 crore rupees.
That explains then why the stock is
right.
not going up. So 5% is a tepid volume growth, and the earnings actually is not giving you that strong picture the way Nestle gave you, the way HUL gave you.
That's right. We're looking at Bharat Forge numbers, and I'll come to it in a moment. But Foram, want to get your take on GCPL right now. You're seeing that stock move up quite smartly. What do you think?
Yeah, it's the crude factor that's playing in, and you know, of course, across the board the numbers have not come nice, but if you know crude fortunately remains to slide down, then we may definitely see good, you know, Q3 probably on a sequential basis. So I feel that the fact all the you know OMCs have corrected a lot and are all trading at such, you know, attractive valuations, one should definitely buy you know the OMC counters.
All right, Bharat Forge numbers coming out. We are looking at a net profit of 227 crore rupees. Indeed, their other income factor has also kicked in, 34 crore rupees over there. Not a large sum, but revenue has come in at 1,680 crore rupees as far as Bharat Forge is concerned. Also, we're going across to hear from PNB, I understand. Is that what my producers are telling me? That we are hearing from the management at PNB. Let's cut across.
We have introduced certain changes into our system and processes. We have created centralized loan processing centers. We have created stress asset management vertical. We have gone for establishment of a centralized back office for trade finance, so that entire trade finance transactions can be routed through it. And we are revamped our marketing structure by linking each and every marketing officer with our important corporate clients as well as the individual clients. The bank is on track to revamp, and what we are doing is basically improving our asset quality. The risk weight density, despite our growth in credit, has improved. From a risk-weighted assets of 64.5%, we have come down to 52% during the last financial year. In the process, we have given greater thrust to high-quality advances. Our proportion of advances to A and above rated account has gone up to 80% during the last 1 year, as against the 60% in the preceding years. So that way, bank is on a journey in improvement of the asset quality. We have upfronted our provisioning requirements also, so to give a greater strength to our balance sheet. In the process, our provisioning coverage ratio has gone up from 59% a year before to 67 point something percent. So that is a quantum jump in our provision coverage ratio. Even our NCLT cases, our coverage ratio is 72%. So that gives us a good cushion. Even the resolutions are happen at a lower value, the bank will have some cushion to absorb them, and even a good number of write-backs are expected. And in the coming quarter, few of the NCLT resolutions which were delayed during the last quarter, we are hopeful that we may be able to get resolution during this year, which will really help us in achieving our desired goals.
Sir, you have aimed NPA recovery of around 20,000 crore in H1. H1, because the last earning meeting you have.
All right, so Sunil Mehta, Managing Director and CEO of Punjab National Bank, speaking about the quarter gone by. Of course, the numbers were below estimates, a weak set of numbers, operationally weak as well if you look at the quarter gone by, and which is what is reflecting in the stock price. It has taken a hit, a cut of 3 odd percentage points coming in on Punjab National Bank. But we're looking at their asset quality, which has improved, and that is likely to play out as well. But PNB Housing Finance, on the other hand, is making strong gains in trade today, like we mentioned earlier. But staying within the entire financial space, let's bring up Axis Bank. They're out with their numbers. Steady set of Q2 numbers is essentially what we're expecting as those numbers come out. Profits are expected to jump 71 odd percentage points this time. But let's get a clearer understanding. Shefali, my colleague who tracks the sector, is joining us with the estimates. How's it looking for them, Shefali?
A steady quarter is expected for Axis Bank. We are looking forward to a number of about 740 crore rupees in the second quarter, and NII of about 5,085 crore rupees. That's likely to be a growth of about 12% on a YY basis. Margins are likely to remain stable for them. In this particular quarter, loan growth expected to be strong, about 15% on a YY basis. That will be primarily supported by the growth that they're going to see in the retail segment. Deposits growth as well is likely to be around 11% on a YY basis, and corporate loan growth is expected to remain muted for them in this particular quarter. NPAs are likely to improve. The gross NPA is expected to come in at about NPAs are likely to deteriorate slightly on a quarter-on-quarter basis. It's likely to come in at about 6.8% versus 6.5% on a sequential basis, and even the net NPAs will inch up marginally to about 3.2% versus 3.1% on a sequential basis. Slippages as well are expected to remain elevated in this particular quarter, and we look forward to whether the recoveries and the upgrades are able to cushion the higher slippages number. Credit costs, because of higher slippages, are expected to remain high in this quarter, but the analyst fraternity is expecting credit costs to normalize going forward from the second half of this year. And increase in the NPAs from the watch lists and the below investment grade portfolio, that's the key for Axis Bank, because last time around what they saw from the slippages from the BB and below investment grade portfolio, that was a key factor last time, and the management had guided that that number will look like somewhere around 1,000 crore rupees from this quarter onwards. So whether they actually stick to that guidance and what the number actually comes in this quarter, that'll be, because analysts have doubt on that particular guidance given by the management. So we'll look forward to that. No major recoveries are expected to be seen for Axis Bank in this quarter. So that's what overall we look forward to from Axis Bank when it reports its earnings today.
Yes, and when they do, we will definitely come to you, Shefali, to understand and get perspective on them, as indeed there will be analysts joining us. So we suggest you keep it with us on BTVi. But Foram, want to get your take on Axis Bank, other private sector banks, and whether you're seeing the importance of asset quality, the way it's panning out at this point in time, with the banks under PCA having issues lending out at a time that we are facing a liquidity crisis. Do you think that there can be a turnaround story over here? How do valuations look from a long-term perspective within the banking and the broader financial space?
Yeah, so we are seeing that, and we personally feel that the mess of, the asset qualities looks to be over, and that is why one should definitely go for PSUs now over the private sector banks. But having said that, there are few private sector banks also which are reported very good set of numbers. Of course, there was fear of, huge asset quality and everything, but I think it's a known fact that the asset qualities are now going to be stabilized. Also, we saw the regional bank, City Union Bank, reported very good set of numbers today, and across the across the parameters, like be the NII growth, the asset qualities, the return on asset, even the provisions have come down for City Union Bank. So we feel that out of the private sector banks and the regional banks, one should definitely look at City Union Bank. Also, Federal Bank surprised us with a very good set of numbers. There was overhang of Kerala floods, which would be deteriorating the numbers, but fortunately it has not happened. Of course, Q3 is also there, which needs to have a close look at. But we are a little bullish on these regional banks, that is the Federal Bank and the City Union Bank. Other than that, we have seen Yes Bank, which is like a Nifty 50 stock being correcting, of course for a specific reason on the successor planning, but now that it's out that they have decided on the name, but the name is still not out, but still it gives a little breather for the stock. And the results of Yes Bank was like a mixed bag. We have seen the retail side improving, but not the corporate lending side. But nevertheless, we feel that valuations are really very attractive for Yes Bank, and as a result we do not want to miss on this opportunity. Hence, we feel that amongst the private and the regional banks, these three would be the picks: City Union Bank, Federal Bank, and Yes Bank. And amongst the PSUs, we feel one should definitely look at SBI at current levels.
All right, Foram Parekh, many thanks for joining us on Lunch Money this afternoon. Lots of stocks that we have been able to discuss. She's your fundamental analyst from Indiabulls Ventures. Meanwhile, let's talk about Welspun Corporation. They've posted a steady set of Q2 numbers. Profits have jumped 40 odd percentage points. The counter